Understanding SME IPOs, a gateway for growth. An SME IPO, or Small and Medium Enterprise Initial Public Offering, is a process where a privately held small or medium-sized company offers shares to the public for the first time. This essentially means the company transitions from being privately owned by a few individuals to being publicly traded on a stock exchange. Why would an SME choose to go public? The primary reason is to raise capital for expansion, research and development, or to pay off existing debt. By offering shares to the public, SMEs can attract a wider pool of investors and secure substantial funding that might not be readily available through traditional financing methods. Going public can also significantly enhance an SME's brand visibility and credibility. Listing on a stock exchange provides a stamp of legitimacy and can attract more customers, partners, and even talented employees. Overall, an SME IPO presents a significant opportunity for growth and expansion, allowing companies to fuel their ambitions and reach new heights. Eligibility criteria. Who can take the plunge? The Securities and Exchange Board of India, SEBI, the regulatory body for the securities market in India, has laid down specific eligibility criteria that SMEs must meet to be eligible for an IPO. First and foremost, the SME must be incorporated under the Companies Act and should have a track record of at least 3 years of financial performance. The company's net worth should meet a minimum threshold, and it should demonstrate consistent profitability in the preceding years. Furthermore, the company should have a minimum post-issue paid-up capital, ensuring a certain level of financial stability. These criteria are in place to safeguard investor interests and ensure that only companies with a sound financial background and growth potential are listed on the stock exchanges. Navigating the listing process. A step-by-step guide. Listing an SME IPO in India can be broken down into clear steps. First, appoint intermediaries like merchant bankers, auditors, and legal advisors. Next, conduct due diligence and draft the prospectus. This document provides investors with detailed company information. Then, file with SEBI for approval. SEBI ensures compliance with regulations. After approval, conduct roadshows to market the IPO. Determine the final share price based on investor interest. Finally, allot shares and list the company on the stock exchange. This process enables SMEs to access public capital and grow. Unlocking the benefits. Why SMEs choose the IPO route. Going public through an IPO can transform SMEs, unlocking benefits that propel growth. Access to capital. The primary driver is raising substantial capital. This funds expansion, R&D, or retiring debt. Enhanced brand visibility. Listing elevates brand visibility and credibility. It instills confidence among customers, suppliers, and partners. Increased valuation and liquidity. IPOs provide a clear market worth and liquidity. Finally, mergers and acquisitions. Public status attracts strategic partnerships. While benefits are substantial, challenges exist during and after the IPO process. Section 5. Challenges on the horizon. Navigating the post-IPO landscape. While an SME IPO presents a plethora of opportunities, it also comes with its fair share of challenges that companies need to be prepared for. First, there's increased scrutiny and compliance. Going public brings with it increased scrutiny from regulators, investors, and the media. Companies need to adhere to stringent reporting requirements and maintain transparency in their operations. Second, market volatility. The performance of a company's stock price in the secondary market is subject to market volatility, which can be influenced by various factors beyond the company's control. Third, short-term pressure versus long-term vision. Publicly listed companies often face pressure from investors to deliver short-term profits, which might sometimes conflict with the company's long-term vision and growth strategy. Fourth, Management bandwidth. Managing a publicly listed company requires a different skill set and bandwidth from managing a privately held company. The management team needs to be equipped to handle investor relations, public disclosures, and other regulatory requirements. Navigating these challenges effectively requires careful planning, a robust corporate governance framework, and a long-term perspective. Section 6. Investor perspective. Opportunities and considerations. For investors, SME IPOs present a unique set of opportunities and considerations. First, high growth potential. Investing in SMEs at an early stage offers the potential for high returns, as these companies are often in their growth phase and have the potential to generate significant returns for investors. Second, diversification. Investing in SME IPOs can provide diversification to an investor's portfolio, as it offers exposure to a different asset class and companies with unique business models. Third, due diligence is crucial. Investing in SME IPOs requires thorough due diligence, as these companies might not have a long track record or extensive publicly available information. Fourth, liquidity risk. Investing in SME IPOs might involve liquidity risk, as the trading volume of these stocks might be lower compared to large-cap stocks. Understanding these opportunities and considerations can help investors make informed decisions when evaluating SME IPOs. Section 7. Case studies. Success stories in the Indian SME IPO space. The Indian SME IPO space has witnessed several success stories, with companies leveraging the platform to fuel their growth ambitions and create significant shareholder value. These companies, through a combination of strong fundamentals, a compelling growth story, and effective execution, have been able to attract investor interest and deliver impressive returns. Analyzing these success stories can provide valuable insights for both aspiring SMEs and potential investors. Section 8. Regulatory landscape. The role of SEBI and stock exchanges. SEBI plays a crucial role in regulating the SME IPO segment in India, ensuring transparency, investor protection, and the smooth functioning of the market. Stock exchanges like BSE and NSE have dedicated platforms for SME listings, providing a conducive environment for these companies to raise capital and access a wider investor base. The regulatory framework and the supportive ecosystem provided by stock exchanges have been instrumental in fostering the growth of the SME IPO segment in India. Section 9. Future outlook. The evolving landscape of SME IPOs in India. The future of SME IPOs in India looks promising, driven by factors such as a growing economy, increasing awareness among SMEs about the benefits of listing, and supportive government policies. Technology is playing a transformative role in the IPO process, making it more efficient and accessible for SMEs. The emergence of online platforms and fintech solutions is streamlining the process, reducing costs, and making it easier for SMEs to connect with potential investors. As the ecosystem continues to evolve, we can expect to see more SME IPOs in the coming years, contributing to the growth of the capital market and the overall economy. Section 10. Conclusion. SME IPOs. Fueling growth, empowering investors. SME IPOs play a vital role in the Indian capital market ecosystem, providing a platform for high-growth SMEs to raise capital and unlock their true potential. For investors, these IPOs offer a unique opportunity to participate in the growth story of promising SMEs and potentially earn significant returns. Understanding the nuances of SME IPOs, the eligibility criteria, the listing process, the benefits, and the challenges is crucial for both entrepreneurs and investors. As the Indian economy continues its growth trajectory, SME IPOs will continue to play a pivotal role in fueling entrepreneurship, innovation, and wealth creation.